If you're a W-2 earner making $300,000 a year or more, you probably give every single year, but you rarely get the full deduction. A donor advised fund can fix that. You contribute once, take the deduction this year, and keep sending money to charities on your normal schedule. The exact same giving, but you'll get a better tax result. We work with high-income W-2 earners every day here at Tax Saving Experts, and in the last 12 months, we've helped over 270 high-income earners save over $12 million in taxes. A donor advised fund was a key move for some of our clients. One example of a client who moved $60,000 into long-term EFTs using a DAF. That created a $60,000 deduction in the same year. It cut their tax bill by 5 figures, and it wiped out all the capital gains they would have owed on those shares. Then they still granted $20,000 a year to the same charities over the next 3 years. In this video, I'll share the exact steps we took to help this client, and hundreds of our clients do the same exact thing. Let's start with understanding what is a donor advised fund. A donor advised fund, DAF for short, is basically a charitable account. You put money in once, you get the full tax deduction this year. And then you can send that money to any qualified charity on your schedule in future years. And that's it. You give exactly the way you already do. But the tax result, it's dramatically better. This strategy works especially well for high W-2 earners who hit high income years, like years when RSUs vest, bonuses hit, or comp spikes temporarily. It also works great for people with appreciated investments, stocks, EFTs, cryptocurrency, that they've held for more than 12 months. So here's why donor advised fund is such a powerful tool. It lets you time your deductions when your income is at the highest, even if your giving stays the exact same. And if you use appreciated assets instead of cash, you can double dip. You get the deduction and you skip the capital gains. It's one of the cleanest IRS approved strategies to lower your tax bill without changing anything about how generous you are. The truth is, it's incredibly straightforward. You set it up through a sponsor like Fidelity, Charitable, Schwab, or Vanguard. You transfer the assets in, the sponsor sells them tax-free. You get the deduction. Then you grant from that account to charities whenever you would like, monthly, yearly, all at one time. You can even invest the balance while it sits, so it grows tax-free before you give it away. If this feels like a lot to remember, you're not alone. The strategy is simple, but executing it correctly, choosing the right assets, timing the deduction, getting the paperwork right is where most people get stuck. That's exactly why we built our free school community, specifically for high-income W-2 earners and business owners making over $300,000 a year. Inside our community, you'll find step-by-step guides for strategies like DAFs, different entity structures, HSA contributions, home office for side businesses, unreimbursed work expense exemptions, retirement contribution maximization, and so much more. Even audit-proof documentation tips. We're not done yet. You even get Q&A support, live trainings, and the crazy thing is, yes, you get all of this for free. At Tax Saving Experts, we want you to actually use strategies like this, not just learn about them. So use the second link in the description to join our community. You will not regret it. Now, let's get back to it and make sure your deduction actually sticks and walk you through the 3 rules that make or break this strategy. First, make sure the assets you're donating are long-term, held over 12 months. That's what allows you to deduct the full market value. Secondly, stay within IRS limits. Typically, cash donations to a DAF are deductible up to 60% of your adjusted gross income. Appreciated assets are usually capped around 30%. And if you go over, you can carry forward the excess donations for up to 5 years. And third is documentation. You'll get an acknowledgement letter from the sponsor. That's your proof. And if you donate over a certain amount of stock or crypto, you'll file an IRS Form 8283. It's not overwhelming, but it does need to be done right. And that's what we help our clients with every single day. And let me give you an example. One client, a single high earner making about $400,000 a year, usually gave $20,000 annually. They had ETFs worth about $60,000 that was held for several years. We moved them into a DAF. That one move gave them a $60,000 deduction in the same year, saved them over $10,000 in taxes, avoided nearly $10K in capital gains, and still let them give $20,000 a year to their same charities over the next 3 years. There was no change to their generosity, just a smarter way to do it. Another client, a couple making over $800,000, had a big RSU vesting year. We helped them move $150,000 total into a donor advised fund. Some appreciated shares, some was cash. They took the full deduction in that peak income year, and now they're granting $30,000 a year to their normal charities. The result, tens of thousands of dollars in tax savings and a 5-year giving period that was already funded. So before you go rush into a DAF, here's the step-by-step checklist we use with our clients to make sure this is actually going to work cleanly. Pick a high income year. Choose a sponsor with low fees and good investment options. Identify appreciated assets you've held for more than 12 months. Coordinate the transfer with your CPA and custodian. Move the assets into the DAF, set up a single investment allocation if you want it to grow, and decide your grant schedule, monthly, quarterly, or annually. Keep all acknowledgement letters and paperwork for your return. And once you've followed those steps, your donor advised fund is set up and running. But here is where it gets even more powerful, because beyond just setting it up the right way, there are advanced strategies that can help you unlock even more tax savings. Fine-tune your portfolio and optimize every dollar you give. Let me show you a few of our favorite plays. You can pair DAF contributions with tax loss harvesting to keep your overall portfolio more efficient. That means while you're donating appreciated positions, you can also harvest losses in other positions, lowering your taxes on the investment side at the exact same time. If you live in a high tax state, a DAF can also help you manage the timing of state deductions, so you get the most value in the years your income is the highest. And in certain cases, some sponsors will even accept more complex assets like private business interests, concentrated stocks, or real estate when it's structured correctly. But here's the truth. You don't need complex moves to get massive results, because at the core, the strategy works for one simple reason. You don't have to give more, you just have to give smarter. A donor advised fund lets you keep supporting the same charities on the same schedule with the same generosity, but finally get the tax benefit you were missing all along. So instead of hoping your giving helps at tax time, you design it to help on purpose. And that's why for high income W-2 earners, a donor advised fund changes everything for your taxes. And yes, I understand this stuff can feel complex. It is a lot to take in, but that's exactly why most people keep overpaying taxes. So in the last 12 months, we helped over 270 new clients legally save over $12 million in taxes, and that's using legal tax strategies like a DAF. If you want our team to help you set this up correctly and implement other tax strategy moves for you to help lower your taxes by $50, even upwards to $100,000 a year, then book a free strategy call with the top link in the description. And if you're not ready for a call yet, that's completely fine. Join our free school community using the second link below. You'll get step-by-step guides covering things such as DAFs, audit-proof documentation, HSA contributions, types of entities and tax impacts, and so much more, like live training replays with short-term rental pros, real estate agents, tax experts, even ongoing Q&A support to keep you moving forward, all for the price of $0. So if you're not already in the community, join right now. You won't regret it. And remember, small moves this week beat big regrets come tax season in April. We'll see you in the next video.